Hi guys, welcome to this 100k subscriber special YouTube video. As many of you requested for one special video on touching 100k subscriber on my YouTube channel, so this video is going to be that special video, and in this video I am going to discuss about that special strategy which helped me to quit my job and become a full-time trader way back in year 2018. Before that, let me give you brief background. As many of you following me on YouTube or other social networking sites like Twitter, Facebook or LinkedIn, you already know that I am not from finance background. I am a BSc graduate, and then I started my sales and marketing profession. Even though I was in sales and marketing, I was never interested in my job, so I was more interested in trading stock market. So despite having a full-time job, still I was following the market. I entered stock market in 2003 and my first year was very bad. I lost all my money in stock market trading. And then I went back to my regular job, that is sales and marketing job, and I started doing part-time trading. And when I was doing part-time trading, I started with indicator. I started with RSI initially. I did not get any consistency. Then I went to MACD. I used that for some time. There also I did not see any consistency. Then I went to Bollinger Bands. Then I went to WAP indicator. Then I went to super trend indicator. So that is how I was constantly switching from indicator to indicator until year 2016. So it was in year 2016 when I decided I'll stop using indicators and I'll start following the price. I will learn price action, and I decided to learn price action in year 2016. And reason for switching from indicator to price action, because I finally realized that it is the price which takes market up and down. It is the buyers and sellers who takes markets up and down. It is not about indicators. Indicators don't decide whether market has to go up and down. Indicators are just derivative of price. Go and see the formula of any indicators. You will see that all these indicators are mainly derivative of price. It is derived by price. So that is why I stopped using indicator. Then I started following price action. So in this video I am going to discuss about that strategy which gave me consistency and which gave me confidence to quit my job and take trading as a full-time. And the strategy which gave me that confidence, that is strategy based on supply and demand. And if you ask me, out of my 15 years, one thing which works most of the time in trading, that is support and resistance. And the supply and demand is nothing but support and resistance on your chart. But only thing is that you have to have that analytical skills to know which is the supply zone and which is the demand zone. Even though big successful trader, experienced trader, always they say price action is supreme in trading, price action is everything. But still, why new traders they stick to indicator, why they rely on indicators? The reason is indicator you don't have to use your brain, but the price action you need to use your brain. That means indicators will tell you just buy and sell, and you think that you have to do only buy and sell and you can make money. Trading is not so easy. But why most of the traders they don't follow price action? Because price action you need to learn. Price action will not give you that signal buy and sell. In price action you have to take that decision. You have to decide whether you have to buy or sell. It will not tell you anything automatically. You have to use the logic. What could be the reason price reversed from here? What could be the reason price bounced from here? So all this you have to use the logic in price action. And another thing, why I say supply and demands work most of the time, because supply and demand is nothing but it is the institutional buying and selling activity. We can't take the market up and down, but big players, big institutes who have money power, they can take the market whether up or down. So supply zone is a place where it is normally institutes who decides to take market down. So demand zone is the place where big institutes, they are the one who decides to take market up. So supply and demand zone is nothing but the footprint of big institutes. So you need to know their footprint. You need to know where they have accumulated and where they have distributed. And another beautiful part of supply and demand zone, it can work on any time frame. It can work on 5 minutes time frame. It can work on 30 minutes. It can work on daily time frame. If you are a day trader or a positional trader or swing trader, you can trade based on supply and demand. And again, it is applicable in all instruments. Whether you are trading in stocks, whether you are trading in indices, whether you are trading in commodities, whether you are trading in forex, you can apply this supply and demand concept in whatever the instrument you are trading. Okay, now if you ask me whether I am using the same strategy, same method, even now, I can tell you that I have modified that strategies. After that, I started using, along with price action, pivot points and CPR, and I combined pivot points, CPR and price action, and I designed 15 patterns and strategies which I discuss in my webinar. So in this video, what I am going to do, I am going to show you one simple method, simple strategy, which if you are a new trader, you can start with this. But there are some rules which you need to follow when you are following this strategy. So how to take the entry, exit, everything I'll be showing in my laptop. Supply zone is something where suppose market opens today with a bullish candle, suddenly it starts going up and suddenly it faces resistance here and it makes a big crash. Okay, when you see this kind of the day, you should mark this level. This is the supply zone. Demand zone means market is in the bearish trend. Next day market opens slightly bearish and suddenly market reverses. You should mark this level. This is your demand zone. This is the level you should mark and wait for price to come to this level to take the trade. Next, I said you should follow the rule. You should be disciplined. Rule is number one. First rule is you should not risk more than 1% per trade. That means your stop loss should not be more than 1%. If your capital is 1 lakh rupees, then you should not lose more than 1,000. Second rule, per day you will not take more than 2, and in some cases you can take 3. In special cases you can increase one more trade and it can be maximum up to 3, but not more than 3. Third rule and the most important rule, very important, that you should trade only price comes to that supply and demand, otherwise you will not take the trade. That means you need to have patience. If you don't have patience in trading, then you should not follow this strategy. No MACD, no super trend, nothing, no indicators, pure naked chart. Okay, let me take you to the June 16th. This is June 16th, Bank Nifty 5 minutes time frame. What happened on 16th? Bank Nifty opened with a big gap up and then made a big crash, right? So this will be your supply zone. This is the level you should mark on your chart. Okay, you can see that I drawn a blue line here, which is the supply zone, where this is the top where market made a big crash. And let us see on 17th what happens when price came and reached that level. So let us start with the candlestick. Okay, you can see that price went near that supply zone next day where I marked that blue line, right, and made a bearish candle. So this is not a breakout, this is called retracement. That means that supply zone worked as a resistance. So when you see a bearish candle, now you will short. And where you'll keep the stop loss, you'll keep the stop loss above that supply zone if provided there is a bearish candle. Now let us see. And you can see that market closed on 17th. After touching the supply zone, market reversed. So you have shorted this candle and you made a profit in this trade. Now let us see next day what happened. So I gave you the example of retracement. Retracement means price goes to that supply zone and reverses. That is the retracement. Now let us see what happened next day on 18th. And what happened on 18th? Did it had a retracement? Was there any red candle here? Unlike previous day, you have seen it. After touching it, market did not break, right? Market reversed, making a bearish candle. But on this day, what happened? It did not retrace, it made a breakout. This is what called breakout in trading. So earlier day, it was a retracement from supply zone. So you shorted this candle. So on 18th, what you will do? You will go long here. On this candle, you will go long. Okay, so you will take a long trade here. You will keep your stop loss below that blue line, which was the supply zone, and you will take a long trade. And you can see that finally market closed here on 18th, and you have taken a long entry here. Don't keep stop loss just below the blue line. Keep some room. And you have made a good profit, right? Here also you made profit, here also you made profit. Now let us see next example. Now let us go to 30th June Bank Nifty, same pattern again. In market opened a gap up, started going up, and this is the place where market faced resistance and a big crash, right? So what is there? This is the supply zone. Just like how I shown you earlier, here also you can see the supply zone. What you are going to do? You are going to mark a horizontal line. So this will be your supply zone. Now let us play the candlestick and let us see what happened next. It's a breakout. It's not a retracement, right? It's a breakout. That means that supply zone was broken. Now what you will do? You will go long, right? You will go long here on this candle. So you have taken a long trade and you kept your stop loss below that. Let us see what happened. Market went all the way till here and made a big red candle. So your entry was here on the breakout candle. Your stop loss was below that blue line supply zone, and you would have made a good profit again on July 1st, and this day was again a breakout. No retracement, right? And this candle broken that blue line, that means it's a breakout. Now can you see this chart on 2nd of July? Market opened again gap up, bullish candle, it went till here and made a big crash, right? Again it bounced and again made a crash. So what is the supply zone here? The blue line which I have marked, that is the supply zone. So market closed on 3rd July. Supply zone was here, but market did not go there, right? Market closed here. If price doesn't reach that supply zone, then you will not take the trade. So 3rd, there was no trade. You can see that 6th what happened? Price made a bearish candle here exactly near that supply zone and made a reversal, right? It's a bearish candle. Even though body is small green, look at the wicks, such a big wicks. So you could have taken a short trade and your stop loss could have been above that supply zone. Second time, if retracement happens, you should not take the trade. First time only you should take the trade. Second time you should avoid it because chances of breakout is higher. So there was no need to short here again. Only short was here. Next what happened? Breakout. So first time there was a retracement. Second time breakout happened. So you will take a long trade here. Entered here, you have kept stop loss below that blue line. And you think that market will go up, and today also you are going to make good profit. Breakout failed, right? So that is what I wanted to show you, that don't think that every time you make profit, that's why stop loss should be there. So I said your stop loss should have been here. You thought market will go up, but market didn't go up. Your stop loss hit. So your stop loss hit in this trade, you made a loss of 1%. 1% you lost in this trade. I already discussed about the retracement. I already discussed about the breakout. You know that already I shown you. Third thing I said, there is something called fake breakout, right? Fake out or fake breakout. And what you are seeing here in this trade, that is the fake breakout. That means it looked like a breakout trade, looks like it gone up but it reversed and stop loss. Now what you will do? You will short. You will short if the breakout fails, and you can keep now stop loss above that supply zone, above that blue line. Okay, so you have taken a long trade, your stop loss hit, you will take a short trade here, and now you will go short. Fake breakout means you will take a reversal trade. In trading, there is something called stop and reversal, SAR. That means if your stop loss hits, you will reverse your position. Initially you are going long, but your stop loss hits. Now you will not be long once your stop loss hits. Now you will go short on this candle. But otherwise what they do, normally novice traders, he thinks that market will go up, his stop loss hit. Now he will start fighting with the market. What he does, he will take a long trade. As price goes down, he will take another long trade. Because he thinks that market has to go up because he has taken a long trade. So that is what known as
fighting with the market to prove that your analysis is right, market is wrong. So what you do, don't fight with the market. If your analysis is wrong, that means it is a fake breakout, immediately take a short position. Your analysis is wrong, go with whatever market is telling. And you can see that finally market closed near 330 and first trade hit your stop loss, right? Second trade, what you have done, you went short. So what you made a profit in the second trade. So that's what I said, you don't have to be right all the time. This strategy I'm not saying works all the time. Any strategy works even 50% of the time. And if you follow 1:2 risk reward, you can be a profitable trader. Only you need to be right 50% of the time, not all the time. So one trade you lost 1%, second trade you made a good profit.
Okay guys, that's it. You have seen how simple this strategy is, supply and demand strategy. This strategy is especially for traders who are very new and they're still searching for some good strategy. For them, I decided to share this strategy. So if you are a beginner, then my advice is look for supply and demand and trade accordingly. You have seen that when price comes near the supply zone, either it will make a retracement or it will make a breakout or it will make a fake out. So you can take the trade accordingly. And as I said earlier, this is the basic strategy. If you want to learn main 15 patterns and strategies based on price action along with pivot points and CPR, then you can join my webinar. I have given the link below this video about my upcoming webinar. So you can click that link and you can see what all the topics I cover in my webinar. My webinar consists of 4 sessions. First session is about the basics of pivot points, basics of CPR, basics of price action. Second session will be mainly about the 15 patterns and strategies. Third session will be mainly about the risk management, and the fourth session will be mainly about the trading psychology. So that is how I conduct my webinar. If you are interested to learn all these things, you can contact me on WhatsApp or email and you can join my upcoming webinar. Okay guys, so I hope you have learned something new in this video. If you like this video, then hit that like button and consider subscribing to my YouTube channel, and very soon I'll come back with a new video. Thanks and take care.